FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 4/8/20. Well, looks like the coronavirus epidemic is getting ready to peak. Probably has peaked, probably on its way down. It certainly is in many places where I've lived in Westchester County, in Palm Beach County, Florida, and even in New York City, it appears to have peaked. Yes, there's more deaths, but the number of cases obviously is declining. And, what's that going to mean to the markets? What is that going to mean to the world economy since we basically shut it down for, in my view, somewhat questionable reasons? Well, and more importantly, what's it going to do for the price of gold? We've got a good friend, Gary Wagner from thegoldforecast.com on with us. We want to know your opinion. Just email us with your thoughts. KL@KerryLutz.com. That's KL@KerryLutz.com. Good to have you back on, Gary.
Great to be here. It's great to be here. We are living in interesting times, to say the least, and everybody out there has got to know what to do in terms of being vigilant, not only for their health, but their financial health.
Yeah, that's so true. And initially, when the whole thing broke and it crashed the world economy and the stock markets, we saw gold go down. We saw silver take a dramatic decline downward. And then all of a sudden, gold back up. It's trading in the mid 1600s now. Silver was over $15 the ounce. It's down a little bit today. But what does it all mean?
Well, the crisis that we're facing, and I will term it a pandemic rather than an epidemic because it has gone worldwide, is a unique environment because of the incubation period and the strange way that this coronavirus acts. In other words, you can be contagious for 2 weeks and not show any symptoms that you're even sick. And that was the issue that was going on. And that's why it spread so quickly, because individuals that felt fine were contacting other people and giving them the virus without even knowing it. And that's something we've never faced before. We've never faced a health crisis that began in China and then kind of went globally around the world because we're so interconnected. And so that's put some unique pressures not only on our government here and the Federal Reserve, but across the entire scope of the world. They're dealing with these issues and they're all dealing with it in different ways. But we did see gold take off. In fact, it's unique in that today we're trading down. I'm looking at gold futures down about $20 at 1674.75, but the high today was 1742. That is the highest it has traded at since it fell from that level. In other words, that's uncharted territory since the time that we hit 1900 and then went lower. We're back in that kind of a mix in terms of the range that gold is trading at, because back then it hit 1900, then it went to 18, and then it would run between 1537 on the low, 1800 on the high. And of course, once it broke that 1537, it meandered down to about 1040, I think. 1050, and that's back at the end of 2015. And since then, we've had a rally going on. It's got peaks and valleys like anything else. But the real key is that we're seeing it run to highs that we haven't seen since the crisis in 2008 and 9 and the subsequent fall to grace that the gold had approximately 2011, mid-2011 beyond.
Interesting. So, yeah, we hit a 7.5-year high for gold on the futures, not on the spot.
Not on the spot, correct.
Yeah, but that doesn't really matter, does it?
Well, it's interesting because I've watched both of them, and it seems as though the spot market is leading the the upside as well as the downside. It seems to go down first and up first. However, futures, the spread has gone between June, which is what we're looking at. When we compare that to spot, it increased to almost $42 to $46 yesterday. Now I think the spread is back down to about $30. So it is all interrelated and relevant. And the question is, how will the economy recover, at what speed, and what are they going to have to do to implement the required cash infusion that's going to be needed so badly by many of the industries that have gotten struck, as well as individuals that are now out of work.
Yeah, it's a big problem, and we see governments responding the way they always do with the problem. They're throwing money at it, right?
Yep. Money is getting cheaper by the day. The Fed has announced that they'll do whatever it takes, and what it's going to take is a huge infusion of cash. I thought a statement made by Kudlow yesterday, the economic advisor to Trump, was unique in that he recommended issuing something similar to the war bonds to kind of fill the coffers back up. And I think that's a fairly brilliant move for a couple of reasons, but we need to spend the money we have or bring it in somehow rather than just look at the release side of the valve.
Mm-hmm. Yeah, so something's got to be done. This is a case where we can't really leave this to the bankruptcy court system to sort out the affairs of tens of millions of companies that will go bankrupt here. We got 30 million small businesses in the country. Then we got 15 million or so sole proprietorships. And then we've got all these people in the gig economy, the Uber drivers, et cetera, that, Airbnb people. Like, I was waiting for Airbnb to crash. I had no idea the way it was going to crash, but I just knew it was going to. And sure enough, the virus took it down, just like the entire travel industry. We got Boeing, we've got the airlines. You could argue that Boeing and the airlines were too busy buying back stock rather than saving for a rainy day, which they certainly were, and their management should have to pay the price for it. But nonetheless, Boeing arguably a national security issue, and the airlines as well.
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
Yeah, my sense right now is that while we see cases diminishing, especially in places like New York, and as we were talking about before the show, when you look at the heat map, so to speak, of the number of cases and where they're clustered, what I have also heard is that at least out here in Hawaii, the apex is supposedly going to come this week. And it's also for many parts in the United States in that we can expect to see a rise fairly quickly this week because it's past that incubation stage where people that actually have contracted it will start feeling it. And if that's the case, we probably will have another week round, maybe 2 weeks at most, where the country recovers from this. We go through that, and then of course, we get on with the business of rebuilding.
Mm-hmm. Yeah, and rebuild we will. But this could have long-term effects for the economy, certainly for the government and the debt and the value of the dollar and gold and silver, et cetera. My gut
Absolutely.
feel, Gary, is that silver is kind of going to do nothing till gold hits 1750. And I don't know when gold's hitting 1750 on the spot, but it's going to. I feel pretty confident about that.
I would have to agree. My long-term studies are indicating we could see a spot rise to as high as maybe 2,000, 2,100. I'm talking about out a couple of years. But in the short term, we will, I believe, see it run to about 1,800 because on a technical basis, that's where we get some sort of resistance. Now, what was interesting is yesterday we broke through that ceiling, the 1703 that had been the high that we've seen gold trade to, gold futures trade to. And then, of course, we're seeing profit taking today, Tuesday. And so my sense is that I'm not sure how long of a dip we'll see here in gold, but it's going to be a fantastic opportunity to add to your positions if you are buying physical gold and holding it yourself. You want to buy on these kinds of dips rather than have any kind of fearful idea that, well, the rally in gold is over. I think it's far from over. It's at the tail end of a long cycle, but that tail end should finish with a new all-time high.
Yeah, I'm inclined to agree. And hey, let's look at silver. You know, silver is the only commodity in the past 40 years that has not reached an all-time new high.
And the highs were so exaggerated in silver at $50. Then, of course, if we look at what's happened recently, during the time when it was selling off, we saw silver futures go to just below $12 an ounce, touch that briefly, and then kind of tick up. But under an amazing amount of pressure. And the real wild card in terms of precious metals has been palladium. It's still the big bully on the block. It's trading, where are we now, $21.25 an ounce. So that's an amazing metal. I remember it being $100 an ounce.
Yeah. And it wasn't that long ago. It was a year and a half ago. It was like 700 an ounce, and we thought that was high. It was less than platinum. It went past platinum. It went past gold, and to me, even though it's not a precious metal per se. Not many people actually have palladium in your safe deposit box.
Sure.
It's still, to me, it's an indication of the market for these metals. If you looked at rhodium last month, rhodium was up to 12,000 bid.
Yes.
And then it went out to 2,500 in 2 days. It was shocking to watch that thing stink.
Absolutely. The interesting thing is both rhodium and palladium in terms of exhaust systems for catalytic converters and automobiles is unique in that palladium, I believe, is the only thing that will actually absorb or bond with the most common, which is the carbon dioxide emissions. And that's why they use palladium for that. Rhodium's for a different chemical. Each of them can attach themselves to different types of exhaust fumes that come out, toxic fumes. And so it's for that reason that we've seen the kind of rises that we've seen in the metals. And in the case of palladium, since it is only mined in South Africa and Russia has the most dominant mines, they kind of control the supply-demand chain. They can shut down the chain to raise the prices.
Exactly. And a very manipulated commodity, like they all are, like all the metals. Let's face it. What I heard was, platinum can do the same job, but in order for the automakers to retool and use platinum instead of palladium, they're going to need all sorts of government approvals to do so. And, and they're switching their engineers from internal combustion engines to EVs, so they don't have the brain power to do it, and they don't want to bother going through the hassle of getting government approval. The last thing they need to do at the present time. So as a result, they've just kind of cast it aside.
Yeah, I mean, the question that I pose, and I don't have an answer for, is what's going to happen when the jobs report is released next month, and when we realize that we're not at an unemployment rate of 4.4 as presented last Friday, but we're sitting closer to 13% unemployment and a huge number of jobs lost. I believe unaccounted for is about 10 million jobs lost in the United States. And we're so used to seeing the positive uptick of jobs that this is a unique scenario that America really has never faced before. And so we will come back as we always do, but what will it take? And those are the questions we have to ask ourselves, because that is where we're going to see some long-term effects in the market in terms of where equities move and gold moves and the rest of the precious metals is as the Federal Reserve comes in and prints more dollars and increases the liquidity so that companies that need it can get it, they're going to have a real rocky road because you can't take back what you've already missed. And so if you're laying people off, if you're, especially for the travel industry, which was hit the hardest, you're in a scenario in which you can't take back what's already happened. And so you slowly rebuild. How long will that process take? And then at the end of it, how is the Federal Reserve going to get back to some kind of normalcy?
Yeah, that's a great question. I think the travel industry and the restaurant industry will snap back a lot faster than anyone thinks. I'm planning my post-COVID-19 vacation. I'm expecting it sometime in mid to late May. That's when I believe most of these restrictions will be gone for two reasons. One, seasonality, hot weather definitely is an enemy of the virus. Not that it's going to stamp it out totally, perhaps. And then we've already flattened the curve. We're over the peak in all likelihood. I don't want to get premature in our celebration here. And I just think that there's such pent-up demand in vacations. Like I'm going to Disney.
We all need to go somewhere after this. There's no doubt. Here in Hawaii, as in the rest of the mainland, from what I understand, there's pretty much a quarantine or mandatory shutdown of everything. And that's unprecedented in this day and age that we've ever seen anything like this. It's almost like 9/11 that carried on past weeks. And so we've got a scenario that what I want to see is if we are going to reach the apex of cases being unfolding, so to speak, this week and then slowly taper off, we should start getting back to normal. I think May is a real good timetable. Hopefully it is a little bit earlier than that, but I fear it might not be.
Yeah, well, I'm optimistic on it, but I guess I'm just normally optimistic, especially because, look, what's your weather in Hawaii now? What are your temperatures?
About 75 on the low side to about 82 on a daily basis.
Same here in Florida, and the temperatures much cooler in New York, in Michigan, in New Jersey, in the states that have the worst outbreaks. Now, Florida is a gateway state. Miami, a lot of people coming here to catch cruise ships in Miami, Fort Lauderdale. So more outside exposure. Hawaii, very remote, insulated, if you will, to some extent. But you didn't have the huge outbreak that we had here. In other parts of the country. Washington State, perfect example. They were the first state to really take it on the chin with all the outbreaks and everything. And now I talked to somebody in Washington State, actually an FSN community member, and they're saying, we want to go out again. Nothing is happening in Washington State. In Seattle, epicenter of the initial breakout, it's the new cases have dramatically dwindled down. So,
correct.
So all of these things considered, and that respiratory ailments are primarily colder weather phenomena, makes me believe it's going to happen a lot faster than anyone thinks. The only problem will be is when will the government figure it out, Kerry? That's really the problem.
You are so correct on that. And that's one that no one can answer. As I said, I think the war bonds idea that Kudlow proposed to President Trump is an exceptional idea. The government needs to raise funds. There's no doubt. They can't just continue to work on the give side and The people that are out of work need relief, so they've done something for them, although I don't know if they've seen checks, individuals. Small businesses, of course, they've got some help there. It's the big multinational corporations that are running through vast amounts of their lines of credit. Marriott, for example, I heard is at the tail end of a $4.5 billion credit line. They've just pulled the last amounts, and their credit rating is going down because of the obvious impact that the coronavirus has had on their day-to-day businesses. Their hotels are not doing well. So I think that you're going to need a lot of government guarantees for some of these companies to be able to get the cash infusion that they really need.
Yeah, they're the government to the rescue. That's all in the bailout, the $2 trillion. They're working on the next and the next and the next and the next. You know, unemployment insurance normally didn't apply to you if you were self-employed, independent contractor, member of the gig economy, whether you're an Uber driver or Lyft or Airbnb. But now they've taken all the barriers down. You can get an extra $600 a week. They haven't started it yet, but if you applied last week, you're going to get it. And all of this is going to make a huge difference. It'll probably slow down the rate that people seek employment. But, there's obviously going to be a ramp-up period that could be a matter of days to perhaps 3 weeks. But once the ramp-up is done, and I'm not saying it's getting back to normal, many of you businesses out there are never going to reopen. You're gone. You're done. You couldn't make it. But Marriott will be around. Hyatt, Hilton, American Airlines, Delta, United, JetBlue, they're all going to be around. They're not going anyplace. The government will see to that. And whether that's viable long-term for a government to do that, I can't say. I am a bit of an economic authority, but I can't say when you reach the tipping point, and you will, and gold is going to lead the way and tell us.
That's going to be a very solid canary in the coal mine, so to speak. I agree with you there. Gold will give us a really strong indication, and so will dollar value that's been falling. Today it's down pretty hard. Otherwise, gold would have gotten smacked a little bit harder, currently down about $14. It's recovering in the futures market back up to about $16.80 now. So it hit a low this morning. What was it? We had a high of $17.42 and the low today, $16.72. So a $70 range. And that's something that the traders are having to get used to, is this expanded range in gold also. It's a lot more volatile than we've seen recently.
Yeah. A lot more. Well, we'll see what happens, and silver is going to be moving. It's just a question of when. It'll happen more gradually, perhaps, but then it'll happen really quickly. Anyway, Gary, it's really great to have you on. Go over to thegoldforecast.com. Check out Gary's material, your work. Really extremely good. I like your short-term sentiment meters. They're very easily to understand. Like they're like dials, gauges, and you got gold at 90. Gold at 93, silver 88, palladium 40, S&P 500 $50, $50. So you're kind of neutral there, and then Bitcoin's at 75. Interesting measurements there. Should go take. Yeah,
those are very, very, very short-term sentiments. It reflects that day itself, not as much as looking out in the future. That's what we talk about in another part of the members page each day, is where we think it's going. But that sentiment indicates what we saw that day. Okay, I like it, and it's a good snapshot to see where the various markets are at. Hey, questions or comments for Gary or myself? We really would like to hear from you. Email me, kl@kerrylutz.com, kl@kerrylutz.com. I'll share it with Gary and we'll get you an answer back. Twitter feed is @KerryLutz. Facebook page, Financial Survival Network. And of course, our main website, financialsurvivalnetwork.com. Gary, always good talking to you. We'll talk to you again real soon. Thanks. Great. Have a great day, sir.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.